morning, hello and welcome. It is Wednesday, the 28th of January. I'm Surabhi Upadhyaya and you are here with us on Moneycontrol. Opening bell, we are set for a very interesting trading session. Global headlines are coming in thick and fast. And here in India, the bulls did try a very brave attempt at staging a bit of a recovery on Tuesday. But will that attempt continue to succeed or not? We have a mixed set of global cues coming in. The dollar is a big headline with a massive fall registered overnight. And that is thanks to the US president's remarks on the US currency. Lots lined up, plenty of earnings to keep us busy, and lots of opinion coming your way on the show as well. Let's get started with the headlines. Wall Street closes mixed ahead of the US Federal Reserve's policy outcome later today. The Dow Jones slips over 400 points on caution, while the S&P 500 notches a fresh all-time high, powered by strength in technology stocks ahead of earnings from Microsoft, Meta, and Tesla. Asian equities trade mostly higher in deals as sentiment improves after the S&P 500 hit a record high overnight. South Korea's Kospi touches fresh peaks. The GIFT Nifty signals a positive opening for Indian markets. Crude oil prices move higher as a severe winter storm in the US disrupts crude production and refinery operations. Meanwhile, gold continues its rally. It scales a fresh record high above 5,200 per ounce as geopolitical uncertainty boosts safe haven demand. Back home, the big corporate story. Vedanta plans to trim its stake in Hindustan Zinc, selling up to nearly 1.6% stake via an offer for sale. The floor price has been set at 685 rupees per share, a 6% discount to Tuesday's closing price, aiming to raise close to 4,600 crore rupees. In earnings action today, L&T expected to see a 16% rise in revenue led by a strong execution in its core engineering and construction business. Maruti is set to report a healthy set of numbers backed by good volume seen in the quarter gone by. Also, watch out for numbers from BEL and SBI Life. And the budget session of the Parliament kicks off today. The Moneycontrol Deloitte CXO Survey points to cautious optimism among India Inc. 24% of the CXOs maintain a neutral stance, forecasting GDP growth in the region of 6 to 6.5%. Simpler taxes and single window clearances top their ease of doing business wish list. Well, those are the big headlines and the big stories that we are tracking today. So let's take a look at the overall trading setup by talking about a lot of what happened overnight. And like we just told you in the headlines, it was a mixed close. The headline is that the S&P 500 managed to hit yet another record high, but a lot of divergence between the indices. It was good going for the Nasdaq as well, managed a gain of almost 1%, but the Dow actually ended slightly lower. Now, the big talking point today is going to be the Federal Reserve rate-setting meeting. Largely, the Fed is expected to leave rates unchanged, but the market is also expecting, at least as of now, 2 rate cuts later in the year, and there is a sort of, a debate around when the rate cuts would be ushered in. Many feel that they will probably come in the second half of the year. Also in focus are, of course, the mega cap US tech earnings today. We will be getting numbers from the biggies like Microsoft, Meta, and Tesla, and these are going to be setting the tone of the market action in the US later tonight. However, the biggest headline of them all is what happened to the dollar. Now, the US president was asked by reporters what he thinks of dollar weakness, and his remarks actually triggered a further selling. In fact, the dollar has lost over 1% overnight, 1.3% to be precise, and that's the biggest one-day fall that the dollar has seen since April of 2025. The dollar is now at the weakest levels since early 2022. So what did Donald Trump say that triggered this sort of a fall? Let me put up the quote for you. It was very clear that he sees this weakness as a good thing for America. He says, I think it's great. I mean, the value of the dollar, look at the business we are doing. And he says, no, the dollar is just doing great. He goes on to say that, it's very interesting if you look at China or Japan. I used to fight like hell with them because they always wanted to devalue their yen and their yuan, and they always want to devalue it. They devalue, says the US president in his trademark style. And he says, that's not fair. They devalue because it's hard to compete when they devalue. So those comments seem to give a cue to the market that the US president is absolutely fine with a weak dollar, and that led to a barrage of further dollar selling. And the dollar index, the DXY as it's called, that finally slipped below 97. In fact, this morning as well, the dollar index is closer to the 96 handle. And that is also accelerating the so-called sell America trade, a move gradually away from US treasuries, to some extent perhaps from US equities as well, though it's not really showing up in the equity market in a big way right now. So the dollar is a big headline. Now, as dollar continue to come under pressure, the precious metal space continues to sparkle. We have seen another 7% up move on silver overnight. Gold is up another 2 to 3% as well. There's continued risk aversion, and this weakness in the dollar, that is only triggering a further move away towards the precious metal space. The one important cue for India is oil, and that's a weak cue for India because oil prices have continued their upward spiral. Brent oil prices have crossed $67 a barrel. The move last night was almost 3% in oil prices, and this because there are these winter storms in the US and they are taking away a lot of the US output. It could be temporary in nature, but the fact is, for the time being, oil continues to add to India's worry as Brent is above $67 a barrel. So this is what we're talking about. Now let's talk about, what we saw in trade here back home. Yesterday was a day of a marginal small recovery from oversold levels. The Nifty managed to, claw its way back from that 25,000 mark. And actually it managed to close above the 200 DMA, the simple moving average, the daily moving average, which comes in around the 26,154 handle. In terms of the flows action, it's more of the same. FPIs continue to sell more Indian stocks in the cash market. They've sold off equities worth about 3,000 odd crores. Domestic institutions, there were also some block deals in large trades in the market because of that. You have a big buy figure from domestic institutions. They bought cash stocks worth almost 9,000 crore rupees. So overall, a recovery came in on Tuesday. The question is, will it continue on Wednesday or not? Before we get to our guests, I just want to quickly run through today's lineup. We have, a very comprehensive take coming for you between 8:30 and 9. As always, we are going to be taking a lot of your technical questions as well. We'll have Ajit Mishra joining in on the technicals, on the trades that you can consider, the stock levels to watch. And on the fundamentals in a bit from now, we'll have Gaurang H Shah joining in. At 9 o'clock, our lead story today is about the implications that the India-EU FTA is having on the auto space. So watch out for that conversation at 9 a.m. That's our lead story. At 9:20, Harish Krishnan is our market maker of the day. So that's the big market conversation coming up. And a little after that, we turn full throttle on the defense sector. We have Jyoti joining in from Nirmal Bang. And that's our segment Beyond the Ticker, where we put the spotlight on the defense sector and what it can expect in budget 2026. So it's a packed lineup. Let's get started. Ajit Mishra is with us for some first thoughts. Ajit, good morning. Great to have you with us on Opening Bell. So that's the real question, right? What are we looking at in terms of the small little recovery that happened yesterday? How durable is it? And how would you approach trade today?
Good morning, Surabhi. So yes, yesterday it was a day of rebound, but Surabhi, it seems like that's too early to call that we are out of woods, considering that we are hovering around the 200 days of exponential moving average. That's the long-term moving average that shows support for the investors. Considering the clues that we have from the global front, earnings so far has also turned out to be a mixed one. And of course, we have this, run up to the budget also. So we expect volatility to remain high. The good part is that yesterday banking showed strength. So that was definitely a key factor to watch out for in today's session. Also, post the Axis Bank number, we saw that apart from Axis Bank, HDFC, ICICI, they also witnessed decent rebound. So it's important to see how banking is going to pan out in today's session and in fact in the following session as well. And that would decide whether we are going to surpass the immediate hurdle at 25,350. If, let's say, we cross this hurdle, then probably we can see this rebound extending towards 25,600 level also. That would be the difficult zone to, cross and sustain. So as of now, it's more of a recovery trend that we are playing out in the market. And a close below 25,150 might again, push the bulls on the back foot. So it's a kind of like tussle that we are seeing at current levels. So more than the index, I feel that stock specific approach in the sectors which are holding strong should be the focus area.
Okay, all right. And, we've got lots of questions already coming in, Ajit, on our live chat. By the way, just reminding viewers, you can, of course, keep sending us your questions on YouTube. We can't take all of them, but we will toss some of the interesting questions that you have to our experts. And a couple of those questions are actually coming in. So let me acknowledge everybody. Hi, good morning. Nisa Murthy Niranjan is asking for a, trade today, a short-term trade that, that can be looked at. There is Mr. Naidu asking whether it's the right time to enter PFC and our REC. So I'm just telling you guys that we're live on YouTube and we're taking your questions as well, and we'll be getting our guests to answer them in just a second. But let me also welcome in Gaurang Shah of Geojit Financial Services into the conversation. Gaurang, good morning. Reconnecting after a long time on the digital airwaves. Good to have you on the show today.
Thank you so much, Surabhi. It's lovely to see you this Wednesday morning, and morning to you and to entire team and to all your viewers. Good to be here. Thank you so much.
Well, great that you're joining in. Very quick opening 30 seconds, Gaurang, before we get to some of the individual stocks and the questions that our viewers have. But, it's been a tough market, tough market. Yesterday was a bit of a sigh of relief, a bit of a breather. But do you get the sense that there is excessive pessimism right now? Do you see light at the end of the tunnel in this budget week? Or do you think this is going to be a range-bound market for a while longer?
So I'll try to be as quick as possible. So I think if you're an investor, it's a great time to cherry pick Surabhi. There are a lot of themes in the market, be it banking, defense, autos, be it cement, be it cap goods engineering, be it capital market related stocks. A lot of things are there. The problem is, what is your time horizon? If you're short to medium term, we are in a little bit of tricky trajectory given the 4 to 5% correction that we've seen as of now from the top to the low that we saw last week. Earnings season is there. The biggest worry is the continuous sell side figure from the FIs. I think if that has to abate a little bit, and if there are more positivities in terms of Q3 earnings, then first thing that I would like to see in the market should be stability. But if you are an investor, this is a great time to cherry pick.
Okay. All right. So we are going to talk about some of those individual ideas on the fundamental side. We call it the compounding idea here. We'll make sure Gaurang gives us at least one today before we let him go. And then, of course, we'll get to today's trades as well with Ajit in a second. But before that, let's quickly run through the stocks and news today. It's quite a packed list because it's earnings season. Lots of important numbers have come, earnings have come, and then there is corporate action as well. So, gentlemen, just allow me, 2 minutes to run through the stocks and news. And then we'll talk about some of the interesting names that perhaps viewers can keep in mind. All right, so here are the stocks and news of the day. Let's start off with the list. First up is Vedanta. The company is going to be selling up to 1.6% of its stake in Hindustan Zinc via an OFS. Now, by doing so, it will be raising about 4,600 crores with the stake sale. The floor price has been set at 685 rupees a share, and that would be a 6% discount to Tuesday's closing price. Vedanta held just under 62% stake in Hindustan Zinc as of the 31st of December 2025, and it has sold its stake in Hind Zinc twice in the past 2 years. So the parent entity continues to raise more money, and it can use that to deleverage its balance sheet. Let's move on. Vodafone Idea reported numbers yesterday. The loss has narrowed. The margin has actually expanded, and the ARPU is also looking a little healthier. The loss has narrowed very slightly to about 5,286 crores. The revenue is flat. It's up about 1.1% quarter on quarter. The EBITDA has increased by about 3%. The margin has expanded to 42.5% versus 41.8%. This is again quarter on quarter. And ARPU is looking like I said, slightly better. 186 is the ARPU, average revenue per user, versus 173. The company says it has adequate cash to service its debt obligations and to meet its spectrum and AGR payments. And it's saying that it's also in talks to raise additional funds. It's talking to banks to look at more fundraising. Let's move to Marico now. Marico came out with a good set of numbers. Profit up about 13.3%. The revenue increased almost 27%. So good showing by Marico. The domestic volume growth came in at 8%, and that led to this big top line jump as well. So good showing there. In fact, a couple of other food companies, consumer food, snack companies have also come out with good numbers. So Bikaji Foods is one of them. Net profit touching almost 63 crores versus just about 29 crores in the same period last year. So it's a big top line, a big bottom line bump up. The top line is up about 11.5%, and the EBITDA has also jumped quite a bit. EBITDA is coming at 84 crores versus 38 crores last year, and the margin is also really swollen up to 10.8%. Let's come to PC Jeweler. Net profit is up 31% for PC Jeweler. The revenue is up 37%, and again, the EBITDA line is looking very, very strong. EBITDA is up about almost 80% actually for PC Jeweler. The margin also is expanded. It's coming at 23%. Okay, so that's PC Jeweler. Let's move to now Vishal Mega Mart. Vishal Mega Mart has seen its profit rise 19%, fairly stable quarter for Vishal Mega Mart. The revenue is up about 17% and the EBITDA is up 20%. The margin has remained very steady. There's a small margin improvement actually. Margins come in at 16.5%. Speaking of more consumer names, more consumer stocks, Metro Brands, the shoe wear company, which is widely tracked as well, came out with a very steady set of numbers. Good showing actually by Metro. Revenue up about 15%, profit is up about 35%, the EBITDA is up about 18%, and the margin continues to show steady improvement. Margin is up to about 32.7% versus 31.9%. So we'll keep all of these stocks on our radar. From the financial services space, Motilal Oswal Financial Services, worth noting. Profit is up just about 6%. Fairly modest in terms of profit growth. Revenue is up about 18%. Also keep Suntec Realty from the real estate space on your radar. Profit has jumped 37%. And the revenue is looking quite solid as well. 344 crores is what they've done on the top line front. RK Forgings, finally, net profit is down 35%. The revenue is up marginally, about 2.3%. And the margin has improved for RK Forgings quite handsomely to almost a 15% level. So lots of earnings, breathless over there. Finally, quickly talking about RVNL. The company has won an order worth 242 crore rupees from the South Central Railway. So, okay, that's our stock list. Lots of earnings out there. Let me go back to both our experts and talk about some of these consumer names that have reported. Ajit and Gaurang, if I could get both of you on the screen as well. Gaurang, you first. So, like I said, some of these food companies, also Marico, the numbers don't seem that bad. And, we've been talking about how these GST cuts and these income tax cuts, whether they'll show up in consumer spending or not. So, tell us if you like any of these Metro Brands, Bikaji, Gopal Snacks or Marico, some of the, traditional FMCG names. Do you like anything in this whole basket, or do any earnings stand out for you?
So, Surabhi, before I go company specific, a small disclosure as per regulatory requirement that all recommendations that I'll be sharing with you on your show this morning, Surabhi, are from our fundamental research team, long-term recommendations. Our company, Geojit Investments, or myself, we do not have any kind of investment, no financial interest, no conflict of interest, but we give advice to our clients on similar lines and they might have their investment interest. So here is the take on the entire FMCG discretionary and non-discretionary for the benefit of all your viewers. Surabhi, so whatever happened last year, whether it is to do with relaxation on zero tax as far as you are earning 12.75 lakhs, you had good monsoon. So agri income was very high, agri produce was very high, and so the agri income was very high. You had the new avatar of GST 2.0 and hoping that on 1st of Feb, this weekend on Sunday, if the finance minister has to put additional cash on the hand of the citizens of India, then I think the consumption theme is going to the next level. Even if I don't take that, but if I take whatever has happened last year, and the fact that most of the verbatim that we heard from the FMCG sector related management post Q2 numbers was very, very strong. So we have positive coverage on a lot of FMCG names, be it Dabur, Marico, Godrej Consumer, Tata Consumer, HUL, ITC, Nestle, Britannia. This is all the non-discretionary. In the discretionary side, we like Voltas, we like Blue Star, we like Havells, Symphony. These are the names that we are positive on. But, the only thing is, look, we are in uncertain time, hoping that on Sunday there is a good reason for us to cheer throughout the Sunday and Monday morning when we get back to trade, if finance minister has to,
But, Gaurang, those, I must say, Gaurang, I must say, those AC names on your discretionary list were very interesting. Blue Star, Voltas, because they had a complete washout year, right? It was a horrible year for all these AC companies. So is that the play that you think that the worst is in the price and then from here on you expect improvement?
So two takes over here, Surabhi. What I have seen at ground level, because I travel a lot for investor awareness programs, the aspirations as far as semi-urban and rural India, wherein you used to have a ceiling fan, or at best, if somebody could afford, you could have a ceiling fan and a cooler. So in semi-urban and rural India, Surabhi, the desires and wants and aspirations have gone up to the next level. And they have moved on to at least starting with the window AC in terms of affordability. If you can afford it, you can go for a split AC, half ton, 1 ton, whatever be it. But the demand, when I was listening into the management of Blue Star, Voltas, and likewise other companies, they were saying that, look, in metros, tier 2 cities, tier 3 cities, there is absolutely no problem in terms of demand. Last year, it was extraordinary because we had delayed summer, we had early onset of monsoon, then we are possibly, now, of course, we are virtually entering the end of winter, and very soon you will see the, summer heat picking up. And as per the whatever, data given by the Met Department, the summer is going to be a little bit elevated. So yes, in terms of valuation, very attractive. And in terms of investment long term, I think it definitely qualifies.
Okay, all right. So there you go. That is the compounding idea that we've got from Gaurang. He's going for some of these AC makers like Voltas, like Blue Star, because he sees some value over there. Got it. Back to Ajit then. Ajit, you gave us a sense on the overall index. Now let's come to your top trades. Will it be Nifty, Bank Nifty? Would it be individual stocks? What are you working with today?
So Surabhi, considering that we are still seeing tussle and the divergence between the Nifty and the banking index, indicates the more prudent approach is to stick with the sectors or themes which are consistently outperforming in the market like this. So one theme is metals, which is not only holding strong, but it is inching higher with every passing day. And steel names, which was slightly on the back foot in this entire rally, has started, witnessing fresh traction. So JSW Steel is one such stock where one can keep on radar for fresh buying, considering that the stock has recently ended its immediate consolidation. It has reclaimed its record highs. Volumes are very strong. So all factors are pointing towards this prevailing uptrend to continue. So with stop at 1180, one can go long in JSW Steel at current levels with 1300 as the immediate target. Other than the metal pack, we feel that IT looks much stable because the earnings for major IT names are behind us. So we feel that there will be less volatility on that part. So HCL Tech, which is outperforming within the large cap IT name, is something that you should be focusing on. So with stop at 1660, one can go long in HCL Tech with 1840 as the immediate targets.
Okay, so two stock ideas, trades for today coming in from Ajit. HCL Tech is one of them. And Ajit, the first stock that you mentioned?
That was JSW Steel.
From the metal space, which one is it? JSW Steel from the metal space. So there we go. Two stock ideas for today, JSW Steel and HCL Tech, two top trades coming in from Ajit. Ajit and Gaurang, let's get both our guests up on the screen if we can, because we have a lot of very interesting viewer queries coming in. So yes, perfect. We have both the guests together now. So gentlemen, allow me to toss, this is like a rapid fire because so many people are live on YouTube and they want your support and advice. So Mr. Niranjan, you've got your answer. You wanted some stocks for short-term trading and Ajit has already answered that one. Mr. Naidu is saying, is it the right time to enter PFC and REC? Now, Mr. Naidu, we don't know whether you're looking at a trade or an investment. Well, let me get a quick check here. On the charts, Ajit, PFC, REC, has anything interesting popped up? Do you see any opportunity there?
It's more of time-wise correction that currently we are seeing in both these stocks. Means still we are trading below the long-term averages, so definitely this indicates sideways negative trend, but at the same time the downside seems capped. So yes, you can start accumulating if the view is, let's say, for 3 to 6 months, and a close above 385 390 would trigger the next leg of the up move. So let's say if your view is very short term, you can avoid these stocks because consolidation is more likely. If you are planning to accumulate for next 3 to 6 months, you can start accumulating.
Okay, all right. So that's the advice on PFC and REC. Paddy is saying, hi Paddy, good morning. He's asking about ITC, and Gaurang just mentioned that he's quite optimistic on this whole consumer basket. He's saying, can we invest in ITC for the long term? Has the stock bottomed out? Gaurang, this one is for you. What about ITC?
Well, honestly, I don't know whether it has bottomed out because nobody's caught the bottom in the top, Surabhi. But yes, there are headwinds. 1st of Feb is just approaching. That's the day when you will see the increase in tobacco-related products and cigarette prices. Some large part of the contribution on the balance sheet used to come from the tobacco-related business for ITC. But what we have seen, Surabhi, is that other businesses have started to contribute. So that and this correction, our sense is that possibly the worst is behind. I don't know whether the bottom is in place or not. So here is the strategy for you. Start at current levels. And as you get dips, you go on adding to it. Maybe you can start from a 25-30% exposure from whatever total capital you want to invest and add on dips. That would be a right strategy, Surabhi.
Okay, that's on ITC. Got that. There's Rohit. Rohit is asking, what is the reason for crude oil inching up? Rohit, we just mentioned this earlier in our show and we started at 8:30. You can blame this on those winter storms in the US. That's taking out a lot of the US output from the market. So because of just lesser supply in the market, in the short term, prices have surged and we are seeing crude at 67. I just have time for maybe one or two more questions and we have to move on with our guests. There's Mr. Hari Krishna saying, hi, Mr. Hari Krishna, good morning. He's saying he's holding Karur Vysya Bank at 254. Should I book profits or hold? And he's also holding NMDC at 78. Ajit, the reason I'm taking this query is that you mentioned banks and banking is the only part of the market, banks and metals. So he's actually holding stocks from the two sectors that are working. So compliments to our viewer over here. But generally, what's the advice? I mean, I don't know if you've seen Karur Vysya's chart, if you can give us any specific advice on this one. And even NMDC, if someone's managed to get onto these metal and material stocks, should they keep riding or is it time to take some profits and go home?
So for Karur Vysya, should be what it indicates is that post the earning, it's a very strong surge that the stock experienced in the last trading session with a strong uptick in the volume as well. So this indicates that this uptrend is here to stay and one should continue with the prevailing momentum. Hence, he had bought it at very lower levels. A trailing stop loss makes more sense considering that the stock is still have more room on the upside. So with around 280 is something that he can maintain as a stop and keep on trailing the stop loss in every 5 to 6% kind of an up move. So for NMDC at the same time, the kind of trend that we are seeing this stock unfolding, overall it looks positive, but it's going to be gradual. So if let's say the view is very short term, JSW Steel, Tata Steel, National Aluminium, these are the stocks that you can look at.
Okay, all right, got that. And last viewer question for today. This one's coming in from Nikhil. There are lots of questions actually coming in on consumer stocks, and this one is from the same space. But Gaurang, it's not the typical consumer because we have a question on Zomato. I think his entry price was 274. Such debate going on, right? Around eternal management change happening, and then I think the losses that they're making or the burn in the quick commerce business, that's still on. What's your sense on both Swiggy and Eternal for the viewers who are interested in this space?
So, Surabhi, Swiggy is not under coverage, but we had covered the stock when the IPO was there. Zomato, which is now Eternal, we had IPO notes subscribed from a long-term point of view, and we have a standalone coverage again from a long-term point of view. The only problem in the immediate short to medium-term, Surabhi, is the elevated level of competition, the names that we have been hearing that is wanting to venture into quick commerce, that may possibly trigger a price war or discount war from a short to medium-term point of view. But look at the number of dark stores that were opened up by Eternal last year. Equal number are going to open up in 2026. They have expanded their footprints into newer geographies, tier 2, tier 3 cities, not only for the food delivery platform, but also for quick commerce, that is your daily requirements. And from there, Surabhi, I think there's going to be a major game changer because Blinkit, once upon a time when the acquisition was done, was sitting like a sore thumb because of the valuation that the company had to pay. And now this particular platform, Blinkit, has become the largest contributor along with food delivery business. So we remain positive. It's only short to medium term overhang. Long term, we believe that the stock has the strength to regain the lost glory and possibly move towards 345, 350.
Oh, okay. So basically, you have to stay through the period of pain. And if you have that kind of patience, then stay on. That's the advice coming in. Gentlemen, as we're winding up, I just want to go back to one of the newsmaker stocks of the day, and that is, of course, Vedanta and Hindustan Zinc. This trade that's going to play out. And Gaurang, let me quickly get your take. We know that Ajit is anyway positive. Ajit, I'll talk specifically about these two stocks in a bit. But Gaurang, your sense, whoever managed to get the trade right on metal stocks made a lot of short-term money. But what about, from a portfolio and positioning standpoint? Would you still add ferrous, non-ferrous, or a Hind Zinc? I mean, how else do you play silver in the listed equity space? So, should you still buy Hind Zinc? What do you do?
So, I would rather buy silver instead of Hindustan Zinc because the rally that you're witnessing, Surabhi, in Hindustan Zinc
even
is because of the silver prices.
Gaurang.
Surabhi, what I have advised, honestly,
that's a bigger headline. You're saying you'd still buy.
Do an ETF. Do an ETF, Surabhi, in silver, even at this price. Because I am of the opinion, this is my personal view, and I stand to be corrected if I'm wrong, and I can go extremely wrong. But gold and silver ETFs or mutual funds are a great theme even now to invest. Nobody knew, Surabhi, who knew that silver will touch 360,000, 350,000? Who knew that gold will be at 150,000 plus? 6 months back, everybody thought that no, it's a balloon, it's a balloon, it's a balloon, and look what has happened. So it is a good strategy to diversify in terms of risk, asset classes, etc., but have a 3-year, 5-year kind of time horizon. To answer your question, Hindustan Zinc, we used to cover, our targets are in place after this rally, so we've not initiated any further coverage. Vedanta, we still remain extremely positive, especially with respect to the demerger and the process of wealth creation.
Okay. All right, Gaurang, thank you very much for that. Ajit, final word with you.
Thank you.
Once again, going back to metal stocks and specifically for Vedanta and Hindustan Zinc. Today, it's obviously news bound and this trade will play out. But what's the advice and what are the levels to watch?
So Surabhi, for Hind Zinc, we are inching towards the record high zone. In the month of June 2024, we made a high around 760. So we are very close to that mark. So usually we see a breather around the record highs on the retest zone. So, and since the stock has already moved up almost vertically in the recent past, booking some profit around that area seems more prudent approach and wait for any dip. Like what we've shared about the steel counters like Tata Steel, JSW Steel, General Steel. They are the more preferred bets. BEDL, here also we are seeing that the stock has been inching higher with every passing day. The momentum is almost vertical. So here at least, but we had some consolidation. So with stop at 680, one can definitely stay put with 745, 750 as a position targets.
Okay, all right, got that. So that's on Vedanta and on Hindustan Zinc. By the way, Ajit, I have one final question for you before I let you go, and that's on the auto space. And our next conversation is on autos. Before that, I'm just checking the pre-open rates. We are almost at 9.5 now, and the pre-open rates have started trickling in. And the Nifty in the pre-open is up 131 points, 130 points, thereabouts right now. Ajit, before we let you go, yesterday was a slam dunk day for a lot of auto stocks, particularly Mahindra and Mahindra, right? And that's thanks to this India-EU FTA, and the big worry in the market was suddenly now all the Audis and the BMWs will be very cheap. So what happens to competitiveness? So that led to the profit taking. But from a levels perspective, did M&M violate any important levels yesterday? Is the chart still strong or not? What's the advice?
So yes, yesterday we tested the long-term average, and we all know that the kind of outperformance that M&M have shown in the recent years. The averages were slightly on the elevated side as well. But after this clarification that we are not going to see this trend unfolding post this deal, so we expect a rebound or some bit of a consolidation. Around 3,300, 3,400 is what we are seeing as an immediate base, and upside is also capped. So Surabhi is more likely to be in a range or maybe a time-wise correction after this recent surge. But the overall trend is likely to remain on the positive side until we decisively break 3,200 mark. So one can continue to stay put if the view is medium to long term with 3,200 as a stop loss.
Okay. All right, Ajit, thank you very much for getting us all the trading advice today. Great to have you on the show. You have a fantastic trading session, and we look forward to connecting again soon. Thank you.
Thank you, sir. Thanks.
All right. Okay, on that note, let's check what's happening in the pre-open markets, and then we'll also tell you about the earnings of today, because there's a whole list of corporate numbers that are coming up. We'll get to the earnings in just a second. Let's right now focus on the pre-open markets, because those rates have been coming through. And like I said, in the pre-open at least, the market has settled fairly all right. It's, the bias is positive. The Nifty suggesting that it'll probably start about 80 points higher in the pre-open. And I'm looking at a lot of these stocks that are in the news, stocks that we've just been discussing with our guests as well. So, for instance, Marico is up about 1%. Hindustan Zinc, which is likely to see that big block trade, is about 2% lower at this point in time. Vedanta is flat. And then you have a bunch of these consumer names like Metro Brands, Gopal Snacks, Bikaji. These stocks are up between 1 and 3%. So, these are the stocks to watch. And the earnings, of course, that are in focus today. Speaking of earnings, let's see if we can actually show you all the numbers that will come out today. It's a very packed earnings lineup day, and you have some biggies like L&T and Maruti, but of course there's several others as well. So check out the earnings to watch today. So those are the important earnings to watch, but now it is time for our lead story. Okay. And the lead story today is everything that's happening in the automotive space thanks to the India-EU FTA. Now, you already know the big headlines. Yesterday, the announcements came through after the press conference, and India and EU have finally managed to close a trade deal, a free trade agreement. It's not finally fully legally signed, but the framework has been agreed upon. And we saw the announcements coming in from both sides, from India and the EU yesterday. Now, the issue with the auto space is that with this FTA, taking shape, the worry is that duties on European cars, which are being imported into the country, those duties will gradually come down. Right now, they're as high as 110%. And these duties are supposed to come down to as low as 10% over the next couple of years. So the question is, will this make the going very difficult for Indian automotive manufacturers? That's the question to talk about. In a bit, I'll just tell you what Harish Shah of Mahindra & Mahindra had to say as well. He put out a very interesting quote, and M&M doesn't seem to be too worried about competition. But really, what's the on-ground reality, and what can consumers expect? And what should you know as a shareholder of some of these listed auto stocks? Well, we've got Saharsh Damani, CEO of FADA, joining in. Mr. Damani, thanks so much for being with us. Good to have you on the program. So first thoughts, what have you made of the free trade agreement announcement and the sudden worry in the market that happened yesterday that now we'll have these cheap Audis and Mercs and BMWs flooding Indian roads? I mean, was that an overreaction, or is some of that fear justified?
So good morning to you and to all your viewers, and it's time for some myth busters right now. The Instagram university has been going gung-ho about that vehicle prices will be slashed. and the BMWs and Mercedes of the world will become mass market products. Well, that is not going to happen because right now, 90 to 95% of the vehicles in the luxury category are being manufactured within the continent or within the country of India. And all the EU FTA regulations and rules which are coming out doesn't apply on vehicles getting manufactured here. It only gets applied on the CBU products, which are the completely built units, which are directly imported from the European country into the Indian market. So there's only 5 to 7% of these ultra luxury vehicles which come in into the Indian market with the likes of the G-Wagon or the BMW Maseratis or Lamborghinis and Ferraris of the world, which are in the ultra luxury category. And also all these implications and the impact and the effect of reduction in the tariffs will only happen from 2027 or 28 as of now, because it's the broad contours which have already been announced right now. It has to pass through the regulations of different countries in the European Union, and only then we will see the impact and effect of it in terms of discounting or in terms of the price reduction which will happen. But definitely it will not impact 90% of the luxury category vehicles which are manufactured within the country.
Okay, so you're saying that, and because there is this threshold, right, this threshold of 15,000 euros, I think that translates to what, about 16, 70 lakh rupees. So are you saying that this is not going to impact the bulk of the cars coming in, because they're, how does the cutoff limit play out?
So see, India in the luxury category vehicles, we sell around 50,000 vehicles a year, and the cutoff limit, the quota which has been given is 2.5 lakh vehicles, which will see the impact of tariff reduction from 110% to 30-40% right now, and in a staggered way coming down to 10% in later years. So I don't see any challenge coming in for the mass market players like the Tatas and Mahindras of the world, because as I said, 90% of the vehicles in this luxury category, if we talk about the three luxury players, Mercedes, BMW, and Audi, they manufacture the vehicles within the country, and as per the announcement, all these tariff reductions will only happen for vehicles which are getting directly imported from the European continent. So we don't see much challenge right now. But what it helps is, in terms of, there are many products which these OEMs or the other ultra luxury OEMs are not able to bring within the country because of the 110% duty which they have to pay. But so with this reduction, the market will open up. They will be able to test markets and bring in newer products which would not have
bring in different products. Got it, Mr. Damani. Mr. Damani, I'm so sorry. I'm so sorry to butt in, but the market is just open. So just allow us 2-3 minutes and then we'll come back to this conversation. The market's actually opened on a good note, solid note. So the Nifty is right now up about 150 odd points. There we go, 148 points, 150 points. That's what we've got on the screen. The mid-cap index is up about 0.5%. You can see the Nifty bank there also chugging along quite nicely. Gains of about 0.6% on the bank Nifty as well. The advanced decline ratio is fairly even Steven right now. So it's a neck-to-neck fight between the bulls and the bears. Now let's actually look at some of the leading stocks on the Nifty. I'm going to talk about some of the major Nifty gainers now. Axis Bank is still continuing its fine form from yesterday. I mean, look at the gains there. Axis put on 5% yesterday, and on top of that, it's looking at another 4% increase this morning. So the bank's commentary about loan growth, I mean, what they're talking about, their margin trajectory ahead, all of that, and of course the improvement in asset quality, all of that has gone down very, very well, and a lot of brokers have been upgrading the stock as well. So Axis Bank is the one to really watch out for. ONGC is the other one, up about 2.5%. ITC, a stock that we just discussed with Gaurang a while back, looking very smart, 1.5% higher. Remember, for ITC, the excise change has already happened. So perhaps the market is not anticipating any more negatives in this budget. So ITC is managing to make the cut. Reliance is charging ahead, and it is really helping the bulls' cause today. A gain of about 1.2% on Reliance. We're seeing gains on stocks like ICICI Bank. Trent is higher by about 1%. And some of the other financials, Bajaj Finserv, SBI Life, ICICI Bank, Shriram Finance. So in general, financials are very, very strong this morning. Tata Motors is an interesting one to note. Remember, auto stocks got a big thrashing yesterday because of the issue that we were just discussing, the fears around this India-EU FTA. There's some recovery in Tata Motors. Let me see what Mahindra and Mahindra is doing. M&M will come up. Yes, after yesterday's 4% decline, even M&M has managed to move up to about a 0.25% gain at least right now. By the way, Maruti is very weak. Maruti is down 2%. Of course, it comes out with numbers, but it seems that there is some residual worry that could perhaps still be plaguing Maruti. Stocks down about 2%, and those are the other losers of the day. Tata Consumer down about 3%. Asian Paints has lost about a couple of points, say $160 down on Asian Paints as well. So these are some of the large cap movers and shakers. Asian Paints actually big disappointment playing out, 6% down on Asian Paints. That's a big one. And the other, of course, Eicher Motors, Bajaj Auto. So auto is still under the weather. Maruti is still down, and two-wheelers like Eicher and Bajaj are also slightly weak. Quick check on some of the other stocks in news. So like I said, some of these snack makers, look at what Gopal Snacks is doing. Really appetizing start to the day. Gopal is up 8%. Very good numbers coming in from Gopal Snacks. Metro Brands is the other stock. Very steady top line growth. I mean, they're growing in this 25-30% region, 30% plus region. There's margin improvement for Metro Brands. And that stock's really up and about. That's Gopal. Gopal is up about 8-9% as we speak. And Metro is now up about 8% as well. Bikaji Foods is also joining that party with a 3.5% up move. So Bikaji is also a big winner today. Vedanta is up 2%. Vedanta gets more money because of the stake that they're selling in Hindustan Zinc. It'll help them deleverage, pare down some debt. So Vedanta is up about 2% as well. Hindustan Zinc itself is down about 2% at least at this point in time. Some other names worth noting. Yesterday, MCX had a great session, and this morning, MCX is building on those gains. Again, this is a result reaction playing out. It's kind of follow through from yesterday. Big morning for MCX, 6% on that stock. There's CG Power that's doing very well. There's Oil India, which is up about 6% as well. So lots of stocks bouncing around this morning. Electra Green Tech, 5% on the upside. Gokuldas Exports, up about 4.5%. So it's a very buoyant looking mid-cap screen, and there's plenty of action out there in the broader market. The Nifty is nicely chugging along, 25,300 on the screen. So that's what we have as of now. So let's take quick final questions on this whole auto issue. So Mr. Damani, one of the points that you made is that those who will be importing these units, these fully built up units, these global auto majors or European auto majors, they can get perhaps other models, newer models, which otherwise they were not introducing to India. That's fine. But really from a competitive landscape, what should we watch out for? Are there any segments that could see heightened competition? Areas where perhaps we would see newer entrants, more European cars coming in which price band and which sort of segments?
So I will flip this competition, and that competition I think will happen in the European markets now, because for the Indian domestic manufacturers, the tariff will become zero once it gets implemented. So it is only a question of time. When the Indian OEMs start exporting to the European countries, build up their brand value, and also do a better finishing of the product so that they can compete there and increase their export market share, and we may able to see more Indian OEM brands plying on the roads of the European continent. But otherwise, as you asked, it may become a test bed for other European OEMs to test the Indian market. They may bring in and test their products in the 40-50 lakh category and see how it performs. And also there are many ultra luxury OEMs which are still not present in the country, and it will give them a benefit in terms of reduced tariffs to bring and test waters in the Indian continent in terms of how their products are competing in the Indian market. But from a mass market point of view or from a luxury point of view, I don't see any challenge coming in for the homegrown OEMs as of now from the India-EU FTA, which has been announced.
Yeah, absolutely. And in fact, that is exactly the sentiment that was echoed by none other than Mr. Harish Shah yesterday. They put out a small press statement saying that they, of course, welcome the FTA. Thank you very much, Mr. Damani, for joining in. Good to have that perspective, good to have that clarity. I think market's kind of seeing through this as well. It's not like we get a flood of European cars and no one's buying Indian, automaker cars anymore. That's not how it's likely to play out. Thank you for that clarification and that perspective. Let's see if we can put up Mr. Harish Shah's quote as we wind down this conversation and welcome in our next guest. Because Mr. Shah made a very, very interesting statement. I mean, he said that, of course, it's a good deal. In fact, the India-EU FTA will allow Indian automakers to sell Indian cars overseas as well in the European market. There you go. That's the quote. We see a huge positive for the auto sector as it provides duty-free access to European markets. He goes on to talk about, this whole specter of competitive intensity as well. He says that this agreement is very well designed. It will attract European OEMs to invest further in India. Let's flip it over, and that's where he talks about competition as well. Only at higher price segments will see enhanced scale in the core segments relevant to Make in India for the world. So yeah, that is the word coming in from Mr. Anisha. We feel this will not change any competitive dynamics in the industry. Strong statement coming in there from Mahindra and Mahindra. All right, with that, let's move on. It's time for our next segment, and it's time to welcome in the market maker. And our market maker this morning is Harish Krishnan of Aditya Birla Sun Life Mutual Fund. Harish, welcome to the show. Thank you for joining in. We've been speaking on television for so many years, but now it's time to go digital. So here we are. Thanks for joining.
Always a pleasure, Surabhi, and looking forward to this digital interaction. Happy New Year to you and your viewers.
Happy New Year to you as well. And, I don't know if it's been a happy new year, Harish. That's the thing. This market has been unrelenting in the new year. Dramatic fall. The Nifty is down about, today is a better day this morning, so not that bad. But, it's down about 5% from the peak. The mid-cap index fell 6-7% from the peak. And investors are wondering, where is the bottom? Or kitna pain? How much more? So let's start right there with that question.
Well, I think it's a wonderful new year for those who are looking to accumulate great businesses at relatively better prices. So, everything need not be about, markets making new highs every day. The reality in our sense is slightly more nuanced than just looking at headline analysis, which is that, we've gone through a phase of 18 months where we call it as a reboot phase. A reboot triggered by externalities. There has been a significant amount of a new wave of, you can say, a new avatar of globalization, if you will, wherein some countries are jostling over wanting to make their own manufacturing bases. Some of them, like the EU-India trade deal that got announced, are trying to usher in greater globalization. So we're seeing a definite reset from that perspective. And the second big reboot that got triggered was the geopolitical setup. Now, both of these have kind of meant that, policymakers have kind of pivoted quite significantly over the course of the last 15, 18 months compared to what was the norm, say, about 5 years before that. Which is namely that to turn more and more to the domestic consumer, because from an Indian perspective, the domestic consumer is the linchpin of the overall economic activity. We're talking about anywhere between 60-65% in various categories coming in from the domestic consumer. So that's been the one big pivot that we've seen starting from last budget, as well as from the policy making as far as RBI is concerned, which is to try and stimulate growth from just macro stability, which was the overarching narrative, say, in 23 and 24. The second key pivot that we've seen is that among the sea of, you can say, issues that have come from the trade side, we seem to have kind of given a sense that, rupee is going to be the first line of defense for us, and which is where the rupee rate has kind of fallen, even as the dollar has kind of fallen against most other currencies in the last 18 months. We've fallen even more than that. And that has its own positives from an Indian consumer point of view or from an Indian investor point of view, though in the near term, this is having its own challenges from a foreign investor selling point of view. Now, the point is, when you get a reboot and you get a refresh, do you therefore have to take fresh guard as an investor? And that is what we think investors have to do, which is that there are opportunities. There are newer set of opportunities that has to be framed and reimagined from an investor perspective. That over the course of the next 3-5 years, there are going to be very different set of sectors and leaders of the market compared to what it was in the last 4-5 years. And I think that is the pain that investors are seeing today, because a lot of them are anchored to the high prices of many of the winners in the last cycle, be that of EMS, hospitals, real estate, investment, infrastructure. All of them are very important. I'm not saying that we are negative in all of them. But the reality is that there is a whole bunch of space, be it in the consumption, be it in the export oriented, be it in, say, insurance sector, which have kind of providing greater margin of safety in our sense. And that is where we are kind of moving our portfolios towards. And which is why I say that these fallen prices for us is actually quite good, that we are kind of gravitating the portfolio to possibly the winners of the next 3-5 years.
Okay, all right. So this is a time to perhaps make those necessary changes in the portfolio. Harish, just give me a minute. I want to go back and check the Asian Paints stock price, because the fall is really precipitous on Asian Paints this morning. We are looking at a 6% decline on Asian Paints. Now, Asian Paints numbers came in during market hours yesterday. This morning, we've got a couple of brokers who've written in, and a few of them have downgraded the stock. Some have even come out with a sell rating on the stock. So I just want to kind of point this out for the benefit of our viewers. Let's get the Asian Paints stock price on our screen if we can, because this is a big stock and it's under a lot of pressure this morning. So yeah, that's what I'm talking about. The CLSA has an underperform rating. The target price is 1875, so significantly lower from where the stock is right now. They're saying that the revenue growth was below forecast, and the volume growth has also not kept up pace. Goldman Sachs has a sell rating. Their target price is 2,500. They're saying the India decorative growth was very weak, despite having a low base. And then there is HSBC as well. They've downgraded the stock to a hold, and they say that Q3 was very, very disappointing. So just pointing this out because it's a large Nifty stock and it's under a lot of pressure. Now, let me take this opportunity to talk about consumer as a space, Harish. Now, paints, maybe we can say it's a separate beast altogether. We've been, discussing competitive intensity, the, new entrants coming in for a while, and perhaps one thought the worst was over. But looking at some of these numbers, maybe not. What's your sense on discretionary consumption overall, and within that, the paint space?
So I think, there are, from an investor point of view, they have to take a call on 2 or 3 big vectors, right? One is in terms of the supply side, because see, demand in India is never a challenge. From the per capita levels of penetration in each and every category, one can definitely think and envisage that over the course of the next 1 decade or 2 decades, we're going to see materially higher consumption levels in each and every category. So the question really is that how is supply responding to it? What do I mean by that? Is there a significant amount of competition? Is there a wave of new players? Is there a lot of capacities getting planned, etc.? So that is one aspect. The second aspect is that how is the ownership within this overall space doing? Please recall that pre-COVID, this was a space that was lionized, and people had a huge amount of exposure and consumption names across the board. Many of them went on to price to sales of, say, 7 times, 10 times, even 15 times in many of these categories. And today what we find is, I'm not saying only with respect to paints, but in many other spaces, we are seeing that consumption as a whole, A, is either under-owned, B, when it comes to fundamentals and how industry participants are kind of tracking, many of them are seeming to get over their margin obsession. They are all wanting lower margins rather than higher margins, and wanting to stoke back volume growth, which is again, to our mind, a very positive read from a fundamental perspective. The third aspect is that this is a space which is throwing a lot of cash flows. And therefore, what they do with this cash flows is incredibly important. Wherein what we are seeing is that there has been a spate of acquisitions and a lot of ventures within these behemoth consumer names, which are trying to now go and acquire a lot of new age companies, etc., which is again something that needs to be looked out for. Now, it's not saying that every acquisition is going to be successful, etc., but we've seen a very big shift. It is not what it was, say, 2 years back, wherein most of the consumer companies were blaming the economy, saying that the economy is not being supported, etc. Today, most of them are taking the blame on themselves, saying that maybe we allowed the direct to consumer brands to come through because of very elevated margins that we were kind of having. So I think it's a welcome step that there is a realization that they need to change. Secondly, like I said, ownership levels are still very, very low, and that provides a reasonable sense that should there be an earnings growth coming through from a demand environment, which is what we expect over the course of the next 18-24 months, that the lag of the transmission of rates, all of these tax cuts, etc., will start feeding through in various consumption baskets. And therefore, we think that, in margin or at the margin, we think that consumption over investment is possibly the way we think that the next set of winners are going to come from.
Consumption over investment. That's pretty interesting. And that kind of gets me to the next question. So are you also then perhaps not expecting a big capex push in the budget? So therefore, not really looking to play the industrials theme? Am I reading it right?
Surabhi, it's not that one is negative about real estate or one is negative about the prospects of private capex, etc. It is about the appreciation that these stocks have already got in anticipation of the things that are happening on the ground, right? So if you, one of the ways in which we look at sectors is to plot the market cap share of a particular sector and the profit pool share of that particular sector. And if I look at industrials and if I plot the difference between market cap share and profit pool share, you have to go back. This is almost at the highs of 2007-8. Where unfortunately we did know in hindsight that the cycle has kind of changed quite dramatically because of the global financial crisis. So we are at the same level. So there's been a significant appreciation of this. So if I were to think from the perspective of, say, gears of a car, government capex has already moved on to the fourth gear now. Yes, we do expect further growth from there, but to expect them to change gears and to say that from the fourth gear they'll go to the sixth gear, seventh gear, I think is being unrealistic. Can they maintain to keep gliding on that fourth gear? I think it's very much possible. Do we see private capex, which is more in the first and second gear, move to the third gear? I think it is very much possible. But the stocks are pricing in as though they are already in the fourth and the fifth gear, and that is where we see a disconnect. Whereas the same thing when we think about consumption, we are at the other end, wherein possibly stocks are pricing in more from the second and third gear, and that is where we think there is a relatively margin of safety should the government continue its pivot towards consumption. And do keep in mind that one of the key reasons for private capex has been the muted consumption growth. So as consumption comes through, private capex should also get benefited from it.
Okay. Harish, finally, I noticed that, one of your calls in your annual outlook letter, the annual sort of outlook report, the dark horse sector you said could be IT. And I thought that was pretty interesting because everyone's kind of almost writing off Indian IT, saying we don't have AI, we don't know how to make these large language models. Though there is a counter argument that I keep hearing as well, that maybe it is going to be, India will be a great adopter of this new technology. So tell us where that thesis came from. Why do you think IT could be the dark horse?
Sure. So we upgraded IT in our portfolios in August of last year, and we continued with that stance even now. This is primarily coming from the same aspect that if I plot the market cap share of Indian IT services over the course of the last 25 years, and if I look at the profit pool share, there have been only 3 instances in the last 25 years where the market cap share of Indian IT in the top 1,000 companies is lower than the profit pool share. The first such instance was in 2008 when the global financial crisis happened, which is where the banks themselves were going belly up in US, and there was this fear that Indian IT vendors may lose relationships of the banks, which were the largest outsourcers, and therefore Indian IT is kind of finished. Then we saw the second kind of such a scenario in 2017, where we saw the threat of digital players coming through and a lot of incremental revenues were going to these digital native companies compared to the Indian IT services. And there was again a phase wherein Indian IT services were kind of written off. And now we are going through that phase where AI seems to be the dominant theme. And it's not that we are taking a very naive sense that AI will not impact Indian IT. I'm sure that there is going to be winners and losers within the Indian IT services. But the reality is, whatever we are talking about, the CEOs and the CXOs are also very well aware of what is changing on the ground. So companies that are using AI to cannibalize their own legacy operations and wherein they can plow ahead farther, I think will be the big winners. So rather than paint everyone with the same brush, we just feel that the margin of safety is relatively higher when we see a construct where the market cap share is lower than the profit pool share, and which is why we believe that there is a trade or there is a potential that Indian IT could actually outperform, even as there were all of these worries of H1B visas getting changed. You had the AI trade that was coming through, and over the course of the last 4-5 months, we have seen Indian IT kind of brave all of these negative concerns and kind of move on. So we continue with that positive thesis on Indian IT. It's again not that we are expecting that if they were growing at 3-5% dollar returns or dollar revenue, they will suddenly transform to a 13-15% dollar revenue. I think it's far more nuanced. We do think that the 3-4% dollar revenue can go to say a 6-7-8% dollar revenue over the course of the next 3 years. With rupee where it is, margins can see a slightly higher turn, which means that earnings can grow at say 9-10%. And then you've got the buyback and the cash flow yield support of under 3-4%. So we're talking about say 12-15% kind of CAGR for an Indian investor in Indian IT services, which we think is better than what the broader market is likely to turn through over the course of the next 2-3 years.
Okay, all right. Interesting call. So IT could be a sector to watch. Consumption over investment, that could be the way to sort of shaping up portfolios and looking at some meaningful gains this year. Interesting thoughts, Harish. Great conversation as always. Thank you so much for joining in. Wish you and your team a fantastic 2026, and we look forward to more conversations.
Absolutely.
Thank you and have a great day. Well, okay, before we move on to our next guest and our next segment, let's quickly look at the market and see, what's going on out there. It's holding, and it's holding with steady gains. That's the news from the screen. Got a 135-point gain up on the Nifty. And if you talk about leadership sectors, then banking and financial services definitely stands out. So let's actually do a sector scan as well. So far this morning, which are the sectors that are sort of leading from the front? Now, the top winners tally includes the oil and gas space. Oil and gas is very, very strong. Remember, we've seen this, overnight surge in oil prices, and stocks like Oil India are reacting to that. The next strong part of the market is the CPSE space. The Nifty CPSE index is up about 2.5% as well. The capital market index is doing really well, about 2% up on capital markets. And the other index that's doing really well is defense. The defense sector, or the defense index, is up about 2%, and it has been one of the best performing parts of the market in an otherwise difficult year. In the last 1 year, the Nifty defense index, let's get the defense index up. The defense index is up about 33%, but it is off 15% off its peak, its all-time high. So that really is the question. Should you be looking at defense stocks? Can the defense sector expect a big boost from the budget? That's exactly what we're going to discuss in our next segment, and we call it Beyond the Ticker. All right, well, it's time to move on and put the spotlight on the defense space, as we've been talking about. And our next guest is joining in for that. We have Jyoti from Nirmal Bang, Jyoti Gupta, who tracks the space very, very carefully. Jyoti, thank you very much for joining us on Moneycontrol.
Thank you, Surabhi. Thank you so much for having me on the show.
So that's the big focus area, right, Jyoti? But defense is always in focus, and now we are getting ready for the budget. And I think there's near consensus that if there is one area in which the government will continue to, push the spends, it should be the defense sector. Do you agree?
Agree. I totally agree. In fact, what I expect for FY26 for the industry is, we should close this year, financial year, with something like a 15 to 70%, 17% revenue growth, margins close to around 20-25%, exports close to around 30,000 crores, expected to grow up to go to around 50,000 crores by FY30. So overall, the defense market size should be close to around 32 billion in FY26, steadily growing at around 4%, which I believe should be higher to around 39 billion, translating into a long-term opportunity of 90 to 100 billion. Now, within the defense budget, we believe that following a 6.8 trillion budget in FY26, which was up to around 9.5%, we expect this to go up to around 10 to 15% in FY27. And the spending should gradually edge closer to around 2% of GDP, supporting long-term modernization and capital enhancement amid heightened border and geopolitical tensions. In fact, the capital outlay in FY26, which stood at around 1.8 trillion, accounting for 26% of the total defense budget, we expect this allocation to increase to 2.1 to 2.3 trillion, implying 20 to 30% growth, with the share potentially moving closer to 30% of the total spending over a period of 3 to 4 years.
So, Jyoti, the thing is, the numbers are obviously big. The spending numbers always are when it comes to defense. And so are the orders. They're always very, very large orders. The question is, from a stock perspective and for investors, they need to figure out how well the companies are executing. So far, how do you rank the companies under your coverage? How do you rate and rank them in terms of just the execution finesse, what we've seen in FY26 so far? And let's go company by company and tell us who have been the best executors. So therefore, those order books are turning into actual, real, tangible top line and bottom line.
So in terms of execution, I think one company that really stands out would be Bell in the public sector side. Bell, I think, would surprise everyone in the both in terms of execution and order book, which of course consistently they are receiving so many orders. Followed by, I believe, should be Data Patterns. Inching up would be Astra Microwave. In fact, Data Patterns has already crossed my annual target expectation of 25%. And then I think HAL could also achieve its target of 7 aircrafts. We will have to wait and watch. This third quarter, we don't think any aircrafts have been delivered to the armed forces. So I believe by FY26, we should see Tejas delivered. So yeah, HAL could be one of them. BEML could possibly, we believe the target that BEML has given, third quarter could be a decent quarter for BEML, and full year targets that they have been guiding, they should achieve the targets for BEML. So overall, I think these few companies which are, aligned to the guidance and are actually also executing and delivering on their guidance, a few of the companies that I see. In fact, solar industries also, I don't, except for second quarter, which was a hiccup for most of the companies in the industry. I think third and fourth quarter, broadly, they will achieve their targets, annual targets, and execution is where they're very much on time in terms of the execution, because they don't have an option. You have to execute and deliver platforms to the armed forces.
Okay, so some interesting names. Let's get the stocks up and let's see how these stocks have done on a one-year horizon as well. Some of the stocks which Jyoti has named would be BEL. There is also Solar Industries that she spoke about, and a bunch of others. So these are the companies you're saying. So BEL, Solar, and in terms of priority, where would you place the others? Once again, just the names, Jyoti.
If you look at our top picks from the Nirmal Bang perspective, it is HAL followed by BEML, Data Patterns, and Solar Industries. So that's what we see are the stocks in our pecking order. And I think broadly most of them are achieved except for HAL.
BEML,
Solar Data Patterns.
HAL, Solar, and Data Patterns. So you've got your mix of PSU and private sector. So BEML from the PSU space, and then you have Solar and Data Patterns from the the private sector space. So now let's put the valuation, argument on this as well. Many of these stocks are off their peaks. So
Yes.
from a valuation perspective and looking at an improving earnings trajectory, which ones really stand out, and which would be sort of the highlight quarter? I mean, could it be Q3, Q4, where these 4 stocks that you mentioned, these 4 companies, where the numbers could really start shining?
I think Q4 for all of them. And FY27 would actually be a surprise, could be the year for surprises for all these companies. In fact, I see that MDL may not be, Mazgaon Dock may not perform very well in FY26, but FY27 would be a very good year for Mazgaon Dock once the submarine orders are actually received by the company.
Okay, so we've got good sense in terms of best execution and how the earnings growth will be. Now, just understanding from the perspective of the next set of big orders, Jyoti, over the next, say, a year or two, what should we watch out for in terms of all of them? Whether it is the shipyards, whether it is something like HAL, which is already executing those that big Tejas order. What else, from an order book perspective, could be the highlight as we close this year and enter the next year?
See, I think the big orders which would be highlight of this and the next year would be the 6 submarine orders, which would be close to around 25,000 odd crores, which is P75 orders. Second would be QRSAM orders, which is, I think, should be roughly around close to 30,000 crores plus. Then is Rafael, which should, I think the deal should close maybe by March or April max. Then a lot of orders in terms of basically you'll see orders for missiles and UAVs. These are a few big orders that you will see in the next, I won't say for the next year, but maybe in the next 2-3 quarters, maybe 2 quarters.
Okay, all right, Jyoti, this is a very, very helpful conversation. Gives us, a lot of context in terms of how to look at these companies and how to go beyond just the big order win headlines as well, how to look at execution. You've given us some specific names. So it's very, very helpful for our viewers. And we hope to have you back after the budget. Let's see how big the defense spends are and what that will mean for many of these companies that are under your coverage. Thank you so much for joining us today.
Thank you so much.
Thank you.
Yeah, bye.
Okay, all right. So as we wind up that conversation, by the way, there is some very unfortunate news that's come in. There has been a plane crash in Maharashtra in the rural area. And I think the news is now finally confirmed. The DGCA has confirmed that Maharashtra's Deputy CM, Mr. Ajit Pawar, was among those on board. And I think in this tragic incident, all those on board, including Mr. Pawar, they have lost their lives. So very, very tragic development and very, very sad piece of news coming in over there. This is the information that we have as of now. But okay, we'll just turn our focus back to the markets before coming to our MC hot list segment. Let me quickly bring you up to speed once again with what the market is doing. And we're looking at a gain of about 120 points on the screen. So it's a steady morning. We don't have too much of volatility or choppiness. And it seems that the bulls are able to hold their own. And the index is managing to stay above the 200-day moving average. And that's what sort of the situation is, at least at this point in time. The leaders of the day in terms of the big stocks, ONGC, some of these oil and gas names are really reacting to the rise in oil prices. Oil has risen 5% from the point on Friday, when we went into the weekend to now, middle of the week. We're talking about a 5-6% gain in global oil prices. And a lot of the stocks are reacting to that. ONGC, for instance, look at ONGC. Let's pull up that stock. 6% up on ONGC. And likewise, Oil India, like last I checked. Look at Oil India. It's running away. 8% higher on Oil India as well. So those are some of the other winners on your screen. That's ONGC and Oil India because of the surge in oil prices. And then, of course, the other Nifty winners will come back up on your screen. They include names like Axis, Coal India, BEL, the stock we were just discussing with Jyoti from the defense space, looking smart, Reliance, Hindalco. So plenty of gainers this morning. Overall, the screen is looking good and it's in the green, at least for now. But on that note, it is time to get to the last conversation on the show, and this is our MC hot list segment. Okay, so well, this is the segment where we always get you some very, very interesting snippets from Moneycontrol. And today we're going to talk about the Moneycontrol CXO survey, which has been done in conjunction with Deloitte. In a bit from now, we'll have my colleague Shweta joining in to give us some of the highlights from this survey. So, yeah, we have some of them running up on the screen. 81% of the CXOs who were polled, they say that they're quite confident of India's economic growth. In fact, they say that the growth is going to be in the region of 6.5% to 7%. So, fair amount of optimism there. At least half of them are very optimistic that we can indeed touch the 7% handle on growth into the next year. 37% of these people who were polled, and they're they cut across different sectoral lines, different industries throughout India Inc. So 37% of them are not too worried about the rise in wages because of the new labor code. They say that it's not too much of a deal breaker. And of course, the geopolitical and trade related uncertainties, they remain the big challenge points and the big talking points. So that's the survey. Let's see if we can get Shweta up. She'll give us some more snapshots and a few more highlights on this one. The survey, by the way, is live, so you can go on Moneycontrol and you can get all the fine print. It's a very extensive survey done along with Deloitte. And, like I said, you've got CEOs, CFOs, and representation from various parts of industry in India Inc. And there you go. That's the website, and you can find the entire survey out there. It went live earlier this morning, and lots of opinion coming your way in terms of what the mood is like ahead of the big event. That is Budget 2026. So let's see if we can connect with Shweta in the next couple of minutes. But for the time being, back to the screen, you've got the mid-cap market that's doing actually very, very well. Like I'm saying, it's a green morning of trade so far, but mid-caps are really where the action is. The advance decline ratio is very strong. You've got over 2,000 stocks advancing right now and just about 600 stocks on the declining side. We haven't seen that in a while. And the mid-cap index is up 0.7%. Let's look at some mid-cap gainers then and see, what's really trending. So oil and gas, obviously, as a space is doing really well. Capital market stocks. MCX continues its good form after results, 5% up on MCX. There's Motilal Oswal, which is up 6%. Motilal also came out with numbers. They've done about a 6% profit growth, double-digit top-line growth. So Motilal's stock doing very well today, 6% higher. Then what else do you have? We have, some of the exporter stocks. There's a little bit of a fire in the belly there as well. So those are some of the oil and gas plays that I was talking about. Look at exporters. Look at something like Pearl Global. There's some excitement playing out. Earlier, Gokuldas exports. We'll pull up Gokuldas as well. It'll come up on the screen in just a bit. Pearl Global, Gokuldas, big exporters. And the market sense is that, okay, we don't have a deal with the US, but we do have this deal with the EU. And maybe some of these exporters can now start looking at EU as a very big market. The shift can't happen overnight, of course. But the hope is that, it'll give them some impetus even as we wait for that deal with the United States. So those are some stocks that are up and about. And then you've got Electra Green Tech. You have Data Patterns. We were just discussing some of these defense stocks with Jyoti on the show. Data Patterns is having a very good morning. 5% up on Data Patterns. These are some of the winners. Let's get the other overall mid-cap gainers up for you on the screen as well. Plenty of movers and shakers out there. Then, of course, the result reactions. Metro Brands, for instance, Bikaji and Gopal Snacks. All these stocks have done very, very well. So that's the shape of the market, looking good so far. Overall, pretty good. Okay, so let's see. Do we have Shweta with us? Let's see if we can go back and connect with her. I think we'll have Shweta joining in just a minute. In the meantime, let's do one thing. Let's quickly recap all the important earnings to watch today. There are several earnings. Remember, L&T and Maruti are just among them. But we can get you a whole list of some of the major earnings to watch. It's a packed lineup. There are lots of mid-caps as well, which are going to be reporting numbers. So in just the next couple of minutes, check out all of these important earnings that are going to be in focus today. promised, we do have Shweta joining in with a quick peek into the highlights of that Moneycontrol Deloitte CXO survey. What does India Inc. want from the budget, and how is India Inc. feeling just ahead of the budget? Shweta, good to have you on the show. So what's the survey throwing up?
So good morning and great to be here on the show with you. Like you just said that we've released our Deloitte MC CXO survey today, where we've spoken to chief executives, CFOs, C-suite officials, essentially, 47 of them. And we've gotten them across, gotten their responses across a whole range of questions. One of them being that how optimistic are they of the Indian economy? And about over 80% of the respondents have said that they are very bullish about the growth prospects of the Indian economy. Also, an interesting insight that's come in is that they don't have any expectations on the tax front when it comes, from the budget, because what they are expecting or what they really want is ease of doing business, ease of compliances. They're saying that we are okay. We just want a very stable tax regime. So don't tinker around too much. Just let things be as of now. And we also had a question on labor codes, the cost of compliances, and how does that affect their competitiveness when it comes to costing, to which a majority of them have actually said that they are neutral about the cost of labor codes once they are implemented. So yeah, of course, the survey is out on our site, Surabhi, so I would request all of you to go check it out.
Oh yes, absolutely. And let's get that visual back up. We've put out a little image of the survey as well, which is out on the website. And Shweta, I believe you're talking to a bunch of experts on this as well, right? Later today?
Yes, that's right. So we'll be discussing the findings of the most definitive CXO survey that's been done by Moneycontrol and Deloitte at 12 o'clock today, where we have Mr. Nirmal Shetty joining us. We have some economists joining us. And of course, editors at Moneycontrol will also be joining us to discuss the survey findings in detail, to decode the mood of India Inc., as it were, right ahead of the budget. And what's heartening is that even amidst all the geopolitical uncertainty at this point, India Inc. seems to be very optimistic, about their expectations, about how they hope to grow going forward, and about their investment plans as well going forward.
Okay, all right. So watching out for that important discussion. And of course, like Shweta is saying, everybody should definitely go out and read the fine print, read some of the more interesting highlights out there on the Moneycontrol Deloitte CXO survey. Shweta, thank you very much for joining in. And with that, it's a wrap on this edition of the show. Thank you so much for being with us on Opening Bell.